This is an S19J Pro Bitcoin miner. When I bought my first batch of these things, I paid something like $10,000 to own this box. This box that today, when you convert straight to USD, and after paying for electricity with your earnings, is making about $1.25 a day in profit. You know, just an 8,000 day break-even period. Clearly, this seems like a terrible way to make any money, but I'm gonna give you a couple of really good reasons why it's not terrible. My name is Nicholas Johnson, and this is the Space Warehouse. Reason number one why this very expensive ASIC that creates almost no money at all is still a good idea to have and to run even at a loss. You don't sell BTC for cash at historic low prices, or at least you shouldn't. While you're mining all these bits, you get to stack them up in your Bitcoin wallet and keep them as long as you like. Bitcoin is categorized as a fungible asset. Any one Bitcoin is exactly as valuable as any other Bitcoin at any given time. Meaning, a Bitcoin that you mined in 2017 that at the time was worth only $1,000 is worth $21,000 today, just like the one that you mined today would be. That also means that in 2024, the one Bitcoin that you mined at a loss today will be worth, I don't know, conservatively $100,000? You might do the quick math in your head and think, big deal, you make $1 a day now, and that's $5 a day then. That's still very much nothing. But it's only profiting $1 a day now because the income is basically the same as the cost of electricity, which is about $8 a day today. It costs $8 a day to run this thing in Orlando, Florida. Not a good rate, by the way. When the price of the coin doubles, though, the price of the electricity cost does not. It stays the same. So it doesn't go from making $1 a day to $2. It goes from making $1 a day to $9 a day. And when the price of Bitcoin goes to 100,000, that's a 5x from today. That means the income from the mining this machine is doing today will have been $45 a day retroactively. And I don't plan to sell a single Satoshi for cash until it hits that mark. That makes the $8 a day in electricity seem pretty small. These machines don't cost $10,000 anymore either. Now they're pretty much about half that, and it takes about 6 of them to make about 1 Bitcoin in about 1 year. So for about $30,000, you can have about $300,000 about 3 years from now. Plus or minus, I don't know, 100% of that figure. It's still a fairly big gamble. The price of Bitcoin could go flat and just never go above what we've already seen. Sure. And you'll have to cover the electrical costs while you wait, which is why I like to point out the bonus of, at least in the wintertime, you can use the heat, because it actually can negate the entire cost of the electricity. These machines convert almost 100% of that power into heat. With 6 of these running in the basement, even with your furnace turned off, in Minnesota in the wintertime, you'd have to open the windows. Although right now it's a really hot summer and it's kind of hard to think about that bonus. This only works if the price of Bitcoin goes back up. Then again, if you don't believe in the future price of the thing, I don't know what you're doing looking this stuff up. Other than, I guess, to point and laugh at the guy who spent $10,000 to get $1 a day back out of the deal. I'm pretty firmly in the camp of Bitcoin will go up into perpetuity. I even think we've probably already seen the worst of this current crash. You know, if a bad market is called a bear, but a bear market happens during crypto winter, and bears hibernate in the winter. Like, they're about to cancel each other out. Plus, bulls hang out in warmer climates, so it's pretty obvious what's about to happen. To sum up the first point, if you have some S19J Pros, should you keep them running? Yes, you should. In the wintertime, even if you do just cash out every month and pay your electric bill with your Bitcoins, don't do that. You could pretty effectively heat your house with just a couple of these things for profit. What a world we live in. But my suggestion, rather, if you have some of these, find some other way to pay for the electric bill. And definitely, if you live in a place where the cost of electricity is higher than 8 cents per kilowatt hour, which is most places, you should think about having them hosted. MUSK Miners, my main channel sponsor, will host your S19s that you buy through them at 8.5 cents per kilowatt hour and no other costs. That means that they will run your actual hardware in a facility that they own. You'll never have to see the things. You just pay the electrical costs. That's how they make their money. They get electricity at an even cheaper rate, and you receive your earnings in Bitcoin from your machines. I've even been to the facility to make sure it's real. Here's the video I made there. You can find a link to MUSK Miners in the description of this video. So that's reason number one. The current price of Bitcoin doesn't matter at all, only the price when you sell it. Sell it later. Reason number two, hardware arbitrage. My friend, your friend Andy on YouTube loves the word arbitrage.
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 It's gotta roll off your lips like me.
That's really good.
I don't know.
Wow! It simply means to find something at one price and then turn and go sell that same thing in another place at a higher price. I might be misusing the word to hold and sell later. Maybe that's speculation. Whatever. Who cares? This machine changes in value. The price of Bitcoin miners is directly affected by the price of Bitcoin. The change lags behind like a week or two, but when Bitcoin goes down, and boy has it gone down, the price of an S19J Pro will go down too. When the price of Bitcoin goes back up, these machines almost instantly become more valuable. They cost more, and a lot more. That means that right now, you could buy 10 of these machines for something like $50,000. While you hold on to them, you can mine with them. Let's enter into a thought experiment where in 6 months, the price returns to $40,000 per Bitcoin. If you buy 10 of these, in the time between now and 6 months from now, you will have mined something like 0.8 BTC. In that future split timeline, this 0.8 BTC has a value of $33,000. So for a cost of $50,000, you've mined about $33,000 in 6 months. And the machines that you did that with are now worth about $100,000. You can sell them, get your initial $50,000 back, plus 50 grand for the arbitrage, so you're ahead about $83,000, and the only expense that you ended up with was about $12,000 in electricity costs. Which means that if it turns out to be true that Bitcoin will recover in price, not only do these machines not actually cost anything, they themselves, the machines, actually pay you to buy them and treat them nicely, just as long as you're willing to sell them when the guy who shovels coal into this steam-powered train engine wakes back up and puts one of those colored logs from Back to the Future 3 into the boiler fire. Buying Bitcoin mining ASICs in a crypto winter is a lot like buying Bitcoin itself, only the machines make more Bitcoin while you wait for them to go back up in value. Is this the infinite money glitch? All wild speculation, but in my personal and professional opinion, Bitcoin will recover. When we were at an all-time high, every third post you read online about Bitcoin was people saying that they wish they could buy in at $20,000. Well, here we are. You don't get rich at the top unless you bought up a bunch at the bottom. The Bitmain S19J Pro is a valuable thing to own today. If everyone believed that, they wouldn't be, but they don't, so they are. I'm gonna keep mining, and you should too.